Hi, everyone. Thank you for joining us for the HerCapital X Public Let's Talk Stocks event. As the name of the title of the event today suggests, we're here to chat about investing and chat about stocks specifically. My name is Rabia Athar. I'm one of the co-founders of HerCapital. And for those of you that are new here today, HerCapital is a nonprofit organization with the mission to empower women to learn about personal finance and investing. And we have a bunch of online resources, including events like this one, to help women understand both personal finance and the basics of investing. I'm super excited also to be joined by a colleague of mine today, Kay. Kay, why don't you introduce yourself?
Hey everyone, thanks so much for joining us this evening live. Like Rabia said, my name is Kay Mikkelsen. I am a program lead with HerCapital, half Danish, half Irish. So I'm actually calling in from Copenhagen this evening. That's a little bit about me. I think I would like to introduce our speakers that are joining us today briefly. So we have Ashley Louise, who is the CEO and co-founder of Ladies Get Paid. We have Rebecca Zavaleta, who is the founder of First Millie. And we have Katy Perry, who is joining us from Public. If you guys actually would like to introduce yourselves in a little bit more detail, that would be great. And maybe we'll start with Rebecca.
Thanks, Kay. Hi, everyone. I am currently located in Pakistan, so it's my 2 a.m. So if you notice a little blurb in my brain cells, I do apologize. Hopefully Ashley or Katie here will be ready to correct me or something. I'm like terrified saying like the wrong thing. Thank you. My name is Rebecca. I grew up first gen low income background. I went to Penn, and there I learned a lot about, I took a lot of Wharton courses. I learned a lot about finance. I learned a lot about 401ks, and I was like, what is this all this information coming from? Why did I never know about this? And right after college, I definitely spent like so much money where I thought like future Becky would pay for things. I had like $15,000 in debt. And I was like, okay, so I'm not really applying what I'm learning as I was working on the underwriting and funding algorithm. And like, I knew what it would take to like build a perfect credit score, et cetera, but I wasn't applying that knowledge until I finally just like buckled down and started budgeting. And while I started budgeting, I started investing. So I'd say during that process, I really thought like, wow, we should really like share this information with people so that they can start building their wealth over time, and hence the birth of First Millie, because the goal is getting people to their first million. So First Millie right now is like a content company. But ultimately, I'm working on a product to like streamline the process to get to one's first million. However, there's a million ways to do it. And it's kind of hard to like nail that down. So I have a product background, and that's mostly what I'm working on. Ashley?
Cool. Hi, everyone. Thank you to HerCapital and to Public for putting this together. My favorite thing to do is talk about women and money, so I'm super excited to be here. I am the co-founder and CEO of Ladies Get Paid. We are a global community for professional women. At the end of the day, what really drives us at Ladies Get Paid is we want to teach women things that are going to make their lives better, whether that's asking for a raise, or it's asking for a promotion, or it's opening your first high yield savings account. At the end of the day, we want you to be more prosperous and happier and richer. We do that through our global community. We have over 75,000 women from all 50 states and over 120 countries. Pre-COVID, we used to do a lot of in-person events that don't happen anymore. But we do this now through education and community, helping women connect with each other and learn how to make their lives better. I am very fortunate that I came from a money household. Both of my parents are on this live stream right now. Hey, Mom and Dad. My mom was a banker, and my dad used to take me with him when I was 4. Every Saturday morning when he used to go to the library and check in his stocks in the Morning Star. So I feel very fortunate that I was raised in an environment where we did openly talk about money in my family. And I feel just so privileged and lucky that I have a background to be able to understand these concepts and then bring those to more women so we can help them get paid.
Yeah, I'll jump in now. My name's Katy Perry. I'm the VP of Marketing at Public.com. Public is a investing social network. So it's a place to make investments, learn about the stock market, and then exchange ideas with a community of over 1 million members, including Rebecca and Ashley here, who are some of my favorite people to follow in the app for sure. So the whole idea behind kind of what we're building is to change the culture around the stock market. I think when we all think of like the old school days of investors in Wall Street, it's kind of this like icky, smoke-filled rooms, golf courses, like things that, you know, I personally don't really see as a culture I want to be a part of. And the reality of what we're seeing, especially this year, if you followed the news in January around GameStop, business and financial news and pop culture are kind of intersecting in really cool ways. And this makes these conversations more accessible to more people. I will tell you that I had friends that months ago, I was begging them to sign up for Public, always trying to get that growth. And they were like, yeah, investing's not for me. And then all of a sudden they're seeing all these headlines and they're like, wait, what does a hedge fund do? Wait, how does this work? And now they're like in it. So I think anytime these conversations are out in the open and made more accessible, it's amazing. So we're really about kind of building that community, having those conversations. And I think kind of the big thing, if you're just getting started, is these concepts might feel very far away from you because historically they have been made to feel that way, made to feel overly complex. But what you see, especially with what Ladies Get Paid does, what Rebecca's building, these concepts can be explained in ways that are very easy to understand. It's completely within your reach. And it actually can be interesting and fun to talk about these topics, which I think you'll see from these two here today.
Awesome. Well, thank you, ladies.
Very quickly.
Yes, of course.
If I were the other person in this chair, I would yell at myself for not mentioning that we published a book this year.
And you can see it behind Ashley right now.
I have some books.
Which book? I don't see any book.
Unclear which one it is. We got a book. If you want to learn more about it, it's ladiesgetpaid.com/book, and you should definitely buy it if you want to have more money.
That was a very important introduction, Ashley. I appreciate that. Well,
I gotta do my hustle.
Thank you, ladies, for being here. We're super excited to have you here with us today. As kind of Ashley, Katie, and Rebecca mentioned, and I mentioned at the start as well, really the conversation today is focused on understanding how to invest. And, you know, a question that we get a lot at HerCapital is, you know, where do I even start? What questions should I be asking? And so, you know, it's easy to talk about broad concepts like investing and like saving and like budgeting, but people and particularly women often find it difficult to go from the concept of A, which is, okay, I want to start investing, I want to start managing my money, to be actually doing that. And so really what we wanted to do in today's conversation is talk about questions like, what does it mean to be an investor? What are the types of questions you should be asking when you're deciding on a particular stock or a particular type of investment to actually pick? And then finally, we wanted to allow the audience, and we've gotten some suggestions also through our social media platforms, is if there are any particular stocks or companies or types of investments that you care about and that you'd want us to use as examples to illustrate the types of questions that Ashley and Rebecca or Katie, myself, and Kay would ask, we'd be happy to illustrate a few examples also, just to demystify the process, just to illustrate how these women who do invest, you know, in their kind of side hustles or day jobs, how are they thinking about it and what can we learn from that? So that's really the agenda for today. And with that, maybe, Kay, we want to start with our first question. I will say, obviously, we will have time for Q&A at the end, but if you have questions as we're going through concepts, please feel free to put them in the comments and we'll try to address as many as we can as we go. And then again, same for the portion at the end where we want to go over real examples of either companies, stocks, or types of investments. Again, if you have any that are top of mind, feel free to put them in the comments and we'll try to address at least a few during today's discussion and maybe address other ones later throughout, you know, the rest of the time that we have with you guys on our other platforms. So with that, Kay, I'll pass over to you.
Awesome. So similar to what Rabia said, looking at the process of going from A to B in investing, you know, of course, it's not always about crunching the numbers. And I think it would be interesting to kind of take a step back and maybe go a bit to the beginning of this whole process, which is confusing and potentially complex as well. What we'd like to know, and I think maybe Ashley, if you wanted to start, is to just ask, what does being an investor mean to you personally?
Well, I think most people don't really see themselves as investors. And I think that's kind of the initial starting point of why this conversation is a little complex and a little abstract for a lot of people. And the thing I say to people in that realm is, do you have a 401k through your job? And if so, you are an investor. So for me, anybody who has their money invested in some kind of way is an investor. And I think a lot of people imagine a Bloomberg terminal and like candlesticks and really abstract graphs about like shapes that look insane. Being an investor can be as passive and totally low touch as you want it to. Katie always recommends a very good book, The Boggleheads, which is essentially find the really boring mutual or index fund that cuts through the whole market and just put your money in there. And on average, people who use that strategy and the set it and forget it oftentimes outperform people who are keyed into their terminal, Twitter account, whatever it is people are doing these days on Reddit. And so for me, it's, are you putting your money somewhere where it's going to grow without you doing anything? Is kind of how I think about, am I an investor or not?
And I know, Rebecca, you have some thoughts on this too, right? Like, what is being an investor for you?
Just like Ashley was saying, when I first thought about investing, I thought it was something I needed to like have an E-Trade account for and have like thousands of dollars like ready to start investing. But over time, like as I signed up for Robinhood, like the idea when it first came out. I was like so excited that like this new platform that you can like invest on the go was like actually like coming out. I think more of investing more in terms of like what Public has trademarked. I think it's everyone's an investor. And I absolutely believe that's true because I like wearing my Public hat in Pakistan or in Mexico or wherever I go. And a whole bunch of people come up to me and they're like, hey, like, I don't really make a lot of money. I'm making like 20,000 a year or 50,000 a year. Like, how can I start investing? And to me, it's like, well, we have fractional shares now where you can just start investing $1 to build like your wealth. And like, there's just so many easy ways to like start becoming a millionaire. One of them is like the index fund process. It's really boring, it's really slow, but it's like one of the surest ways, and nothing in life is ever certain, but it's one of the surest ways to like actually start building your wealth. And I have also been thinking separately from all of that, just from a personal level, I've been thinking a lot about this lately. One of my biggest just insecurities, period, is not being like financially secure. I would say like just growing up from like a low income first gen background, like not being able to afford jeans or like being on like a lunch payment program like funded by the government. Like I am so terrified of being broke that a lot of my decisions focus a lot on like financial security. And I've spoken to like so many like single moms in my community, and to me, being an investor is literally being able to walk away from anything toxic in your life. Toxic relationship, okay, doesn't matter. Like I got my money, so you can just peace out. Toxic job, same thing. Toxic anything, toxic city, whatever. Like being an investor empowers you to literally walk away from any situation that doesn't serve you. And like I had no idea how much this really affects me until I guess like you start hanging out with different people from like different social like income backgrounds, and you realize like what sort of peace of mind having like financial security brings you.
And Rebecca, I think that's such an amazing point, because I think oftentimes the biggest barrier to lower income portions of society being involved in the investing kind of community is that lack of financial security. Because I think there's a lot of predisposed notions around, I need to have a certain amount of money before I can even start, or I need to amass a certain amount of wealth before I can even start. And oftentimes we miss out on the fact that you have to start building that wealth to get out of that vicious circle. And so I think it's extremely important to make that connection between being an investor actually means financial security, and actually means independence, and actually means financial stability if you're doing it correctly. And it doesn't have to be reckless, and it doesn't have to be something that only the rich can do.
Yeah. And just to add to that, I feel like most of the time the financial advice is like, just invest the leftover money that you have after your fixed costs. And then it's like, but I don't have any. It's like, so instead of like, someone posted something really interesting on Instagram talking about being like obstacle minded versus opportunity minded. So instead of thinking, okay, I don't have enough money, it's kind of like shifting to like, how can I create opportunity to create more money? Maybe I take on extra shifts. Maybe I gamble with my family and play 31 and win like the pot. It's like a very like famous Latino game, which is how I actually started making most of my money as a kid. I was a huge gambler. There are just so many ways to like kick off like your little pot, like maybe with like $100. You're basically already an investor.
One thing I just want to add is I think one thing Rebecca said really stands out, and that's that sometimes even like financial institutions historically have been really underserving a lot of communities, and it sometimes is nuanced as in the language. So, just whatever money you have left, or open an account with $10,000 and get 500. Like when normal people see that, it just kind of embeds this concept that you have to be at this certain level. And I think another interesting point is that idea of if you grow up without financial security, you're that much more reluctant to let go of cash in hand. And that's totally reasonable and understandable, but it's so much harder to take this leap of faith on this thing called the stock market, which you were never taught about in school. And so that's why like the education and understanding investing and how it works is so important, because it is at the end of the day, I think about ownership, owning a piece of a company that you believe in over time. And ownership is really empowering and a lot less scary than looking at the stock market like a casino.
Yeah, absolutely.
So I think having heard, what it means to you guys to be an investor, in terms of if we kind of go a little bit forward, how do you approach picking stocks? Where do you start in that light? What would be the first thing that you would go to? Anyone can take the floor.
I'll go first. I guess for me, I kind of see it as a sequence, and a lot of this also kind of depends on what your personal risk tolerance is, and a lot of these things that we've talked about where, do you come from a background where you like really worried about financial security, right? For me, my parents always taught me how important it was to like make sure that you have financial independence and you're saving for retirement. So even for me, in jumping from my like full-time job at a tech company where like I had a good paycheck, I had an employer match 401k, thinking about moving to Ladies Get Paid and being an entrepreneur, I mean, I was so freaked out about it. I was like, where's the money come from? Like, am I gonna like save for retirement every year? And, my investing that I was doing, admittedly, it went down for the handful of years when I first started doing this, right? So for me, at least personally, I kind of think about this as a sequence where get the house in order from like the most stable things to then the riskier things. For me, I say before you do anything, have 3 to 6 months of your expenses in a high yield savings account, right? And I think we especially saw that when COVID happened last year, right? Like the bottom fell out of everything for a lot of people. And not everyone is fortunate to have that kind of financial stability there. But first, like get 3 to 6 months in a high yield savings account. Then if you work at a company, make sure that you are just like maxing out your 401k as much as you can and getting that employer match, right? That's step 2. And within that, you can think about what are you putting into these retirement accounts. After that, then I think about these kind of bigger index funds, mutual funds, these investment vehicles that are, again, basically you're buying the market and it goes up at a predictable rate year over year. You set it and forget it. Then for me, I kind of think about how adventurous do I want to be with my funny money, which I, depending on the month, depending on how bored I am during COVID, depending on how much time I spend on Reddit, that percentage changes. And then after that, for me, my strategy, at least right now, and I wasn't super hands-on about my investments until COVID happened, and I was like not leaving my house, and I was really bored and felt like I wanted to do something that would make me more money. I went through a plant phase also over here. Then we turned to investing. But and then I have my little funny money, my risk-taking money. And for me, the things I think about there are, what do I see are trends that are happening in the world, right? Something that happened with COVID last year was everything moved online, right? And then these fintech companies popped, right? Climate change is happening. So are we going to have increased investment in green energy companies? And then again, thinking about how much risk do I really want to take here with these? I'm very personally into ETFs right now. If you're thinking about picking individual stocks, right? There's a handful of things that you'd think about going into that. But for me, if I can look at something and I say, all right, I think this industry is something that's going to grow over time, but I'm not sure who exactly is going to be the winner out of the pack, I'm doing ETFs then. But that's all within my funny money. And maybe that comes from me also just prioritizing nothing other than financial security in my life, where I'm just like, what's the boring stuff that's going to print me X% over 30 years, right? Like, let's do that. So that's kind of how I personally think about when I'm picking things and where I'm putting my money over a cascading risk level.
And I think just to kind of outline that for the audience, what, and I see some folks ask the question of, do you recommend investing in index funds, mutual funds, individual stocks simultaneously, or going in an order? So for Ashley, for her personally, obviously, if she spots a trend that she likes, Ashley, correct me if I'm wrong, but, you'd rather invest in an ETF, which is obviously a combination of individual companies that's tracking a particular industry, right? So if you like, for example, tech, one way to go is pick a particular stock that, is in the tech industry, but then you're betting on that specific company doing well. Mm-hmm. Whereas what Ashley's saying is, instead of going through the trouble of finding that one stock and putting all my money in one company, I'm putting my money in the sector, which I think is trending upwards. So, maybe I could be wrong in picking. And the reason why this is less risk averse, to her point, is she could be wrong in the specific tech company she picks, but there's a higher likelihood that she's right about the sector and a trend that she's noticed. So if you have a view on on healthcare or medicine or healthcare and medicine or, fashion, are you better off, depending on your risk tolerance, picking that one company or picking an industry through an ETF or a mutual fund? I think that's super helpful way to think about it, Ashley. So thank you for that.
It is also this kind of interesting circle of self-confidence where we're having this conversation where a lot of people come into this thinking like, I'm not smart enough to do that. Or, like, this isn't for me, right? Like, I don't have the background to do this. I mean, self-directed investing. But then at a certain point, I'm kind of like, there are people a lot smarter than me at this. And like, I should also maybe do what they're saying, and finding that balance of being confident in what I think and investing in that direction, while also like having an adult in the room, is why I kind of, beyond my like 60 to 70% of like very basic safe investing, outside of that, I'm enjoying being in the ETF zone right now.
And Ashley, I actually have a question about that. So your funny money goes kind of more towards maybe industries or companies that are kind of trending. Mm-hmm. Has it ever been the case that you have started putting your funny money there, and then actually it's become a part of your long-term investment because you've seen like, okay, this is something that is going to continue to be a safe zone?
Yes. The way that that's happened for me over time is I've increased the amount that I'm putting in different things, right? Like, so I like to do dollar cost averaging, which is over time, methodically investing in something week over week or month over month. So you're kind of catching the up and downs and leveling out over time. But over time, I've increased the amount of money that I'm investing as I'm adding, right? And the way that I kind of did this too to get comfortable was in the beginning, I was doing like really small amounts, right? Like $20, $25. When I would see something that was working and I was like, oh, okay, I'm gaining confidence here. This was right. Then I increase the amount over time that I'm adding each time.
Okay. Yeah, so you would start out small and then kind of gauge from there.
Yeah.
Adding to it. Awesome.
So I noticed in the comments, like everyone's trying to figure out like how much do we put in index funds, how much do we put in like stocks. I'm happy to share my own strategy.
Mm-hmm.
I'd say my portfolio is more of 80% in index funds because index funds are kind of like the tried and true like sort of method. It's like you go on Pandora, you pick your radio station, you trust that it will play you the hip hop songs that you want. That's what an index fund is. Like it's just updating you with like the next best song. And you blindly trust it and like, you just start grinding towards it. And the 20% of it actually goes into like, kind of like what Ashley was saying, like my funny money, I call it my fun money, where I'm like, okay, so 20% of this money is going to go into stocks that I am happy to just invest. And if I like lose it, that's fine because I'm learning through this process. And just like Ashley was saying, like she DCAs this process. So DCA is dollar cost averaging. It's like a way of like deploying your capital. There are two ways to do it. One is the lump sum method and one is the DCA method. When the market is usually turbulent, like historically, it's been better to actually use the DCA method. While like, long term, it's actually better to do lump sum. But I'm just like, so much information. Like if you just pick your amount that you want to invest per like your payday, maybe it's $100, maybe it's $500. The idea is that you're consistently married to your strategy. So like I said, I do 80-20. So 80% of my like $500 or like, let's say $100. So $80 of my $100 are going to go into my index funds that I chose. Which index funds am I choosing? I always say definitely invest what you know best. So maybe you want to do like the S&P, any index fund that follows like the S&P 500, or maybe like I know tech a lot, so I'm going to do like tech ETFs or healthcare ETFs or whatever, and then you put 20% of that of your funny money into stocks. And when I think about like stocks personally, I think I like did a post on this. I think of like how long am I going to hold my stock? I always hold more than a year, period. I don't want to deal with short-term gains, period. Because you can pay up to like 35% with short-term gains versus long-term gains, like you just pay 15%. So that means you have to hold for more than a year. And so I don't like having to think about this all the time. So I think of it more of like minimum 5 years, I'm holding this stock. If I buy Tesla, it's because I believe it's going to go up in the next 5 years. The other one is trends. So like Biden is coming to the administration. So that means he's going to be investing in energy, probably a lot of like sustainable energy. So I'm like already looking into like solar companies or any companies that are focusing more in that area, because not only is it just a trend, but it's also incentives, meaning the government is going to incentivize these sectors to grow. Like, I don't know if you guys noticed, but like the market went up a bit because Biden will be investing a lot into these areas. And this is like also exactly why like Tesla went up, is because there was a huge incentive for their consumers to buy electric vehicles because they would get their money back when it came to taxes. So that really helped Tesla. So I always look at like government, like external incentives. The other one is like value investing. This is like Warren Buffett, what he says, like, you should invest in a company if you think a monkey can take over. And a monkey can, so you got to ask yourself, can a monkey take over Amazon? Amazon may sound like really complicated to like operate now that Jeff Bezos is gone, but I'm pretty sure like he has like 100 people like watching over the whole thing. So I'm like, yeah, monkey can take over this. Like, I think that's like an interesting way of like thinking through it. The other one is like the product roadmap. I always like looking into teams, and I like to look at who the leadership is, how is the leadership responding to trends. are like, for example, Disney's a great example. When Disney bought Star Wars, I was like, okay, so they're really going to create a lot of more content out of this. And then when Disney created Disney Plus, I was like all over that. I was like, okay, they have a digital, yes, they have a digital strategy for the future. Same thing with Netflix. Netflix started focusing on like owning the entire like production cycle. Like, okay, we're not just going to deliver content. We're going to create content. And we're not just going to create content. We're going to create content in like a few months. So like, obviously that like freaked out Hollywood because the way that they can push out content is so fast. I mean, they have us binge watching, what is that latest show? Like
WandaVision.
It's like WandaVision.
Wanda.
I was also looking at the Darcy one, like the Pride and Prejudice type one.
Bridgerton. You're talking about
Yeah. Yeah, everyone was talking about it. And
well,
they just
I love that, Rebecca, because I think, one of the biggest barriers to starting is this confusion around like, where do I start? And everyone who's already investing is way smarter than I am. But I think, just the thought process behind like why you invested in Disney. I had the same thought process, right? And sure, like maybe we're not sitting there looking at Disney's balance sheet all day, but as consumers, sometimes you actually have very good insights into broad companies or like big companies that actually can inform your investment decisions. And those might be insights that maybe kind of, the standard boring investor that you have in your head doesn't have. And so that may be your competitive edge. But just something to remember.
Yeah, like buy what you use is a fairly like decent strategy, right? Like if you are someone who's hopping on your Peloton every single day and you see all your friends in there using Peloton every single day, that's like a pretty good sign that that's a safe investment to make.
Absolutely.
I love talking about Disney stock so much. I was like, how did no one ask about this one? It's like absolutely my favorite. And again, shout out to my dad who bought me 10 shares of Disney on the day I was born. Thanks, Raj.
Wow.
That's sick.
So I do want to add one.
Sorry.
Okay. Just to Rebecca's point of this kind of dollar cost averaging strategy, you can just set that up to have it be fully automated, right? Public, absolutely. I think you guys have the set up automatic?
Currently we have automatic dividend reinvesting, not the automated deposits yet.
But it's on the roadmap.
It's on the roadmap. There are a lot of ways that you can literally just set this up where like every other Friday I invest blank, blank, and blank. And again, just like set that and forget it.
$10, $50. Just get it in. I did want to say that the last thing I usually look at, so there's like many ways of doing like stock evaluation. A lot of it is like technical analysis, but I'm not a day trader. I'm like a lazy, like sitting on a beach having a pina colada type. I like butcher that pina colada. Okay, type of trader. Like I want to be remote, on the go, jumping on a plane, going somewhere. Maybe I'm camping. I want to be able to just buy my stock right there, and I do it based off of like this high level analysis of like what I was explaining is like trends, how long am I going to hold, the incentives. And the last piece is competition. I always look at competition. For example, I have been like trying to figure out if I want to buy Uber stock, especially after the whole like executive fiasco happened and it just dropped. But then I keep looking at Lyft and I'm like, maybe Lyft is just going to like outshine Uber like so bad. So that's kind of the reason why I haven't been able to invest in Uber. And like everyone might have like their own way of like defining these things. And the last point I want to add is like, you should just literally trust yourself with your fund money. And like, there is no better teacher than like making mistakes because, what I find really interesting is like Ashley was saying, when I first started investing in stocks and individual stocks, I lost all my money. It was so bad. But then over time, I started to learn a little bit. And I'd say like my returns from stock picking are way, way higher than my index funds. Like right now, it ranges from like 150 to 200% across like all my brokerage accounts versus like my index funds are giving me like 7 to like 15%. Like, and again, 80% of my stuff is in there because I just trust my Pandora radio station to be giving me the next song that I want versus like trying to think of like, what's the next best song.
And I think your point about like leadership and talking about Uber and whether or not like you can make an investment there. That's something I think about a lot, maybe sometimes a little too much. But I mean, I was like a huge Tesla naysayer until fairly recently, because I was like, I mean, look, Elon Musk is a genius. He's also insane, right? Like you read these articles about him doing all this crazy stuff, and I'm sort of like, I don't feel comfortable with that, which like now to my disadvantage, I didn't invest in Tesla a few years ago. But on the other side of that, and I know someone asked about Salesforce in these shares, but like I think Mark Benioff is an incredible CEO. So that's why I invest in Salesforce, right? So maybe I think about this a little too much, but that's something personally that I think about a lot. Either, you know, if I worked at this company, how would I feel about this person being the CEO? And that kind of guides me a little bit too.
One thing that I love when just in you guys talking is if you can see how these conversations can be really interesting and like accessible. Like we're talking about things we like, TV shows, leaders, and that is what I love, because when we're kind of in a long term, you're talking about trends, and kind of like what Rebecca was saying about kind of changes to the administration. It's not about seeing a headline and being like, oh, I'm going to beat everybody. And it's, you know, by the time the headline's out, you know, we're always going to be behind the insiders, behind the news breaking. But that news piece could be a signal to a broader trend that over 1 to 5 more years could lead to something. And so I just think talking about this stuff is really just fun, and people don't realize that. And it's sort of like detective work. Like if you love Googling things, like there's so many ways you could go. I've heard people looking up what recent job postings were listed by public companies, because it will reveal where they're investing their money. And it's just so fun to do. And it is very different than when you're a day trader looking at those charts. For me personally, that's just less fun, less interesting, not what I want to talk about. Whereas all the things you're hearing here, these are all conversations like I would love to have over drinks with a friend.
Here we are.
So just to recap, Kay had asked the question of, you know, how do you think about investing? What are the questions to ask? And some of the things that Ashley and Rebecca mentioned for the benefit of our audience, obviously think about your risk tolerance. So how much risk can you take? And then depending on that, you can decide what amount of money you want to put into something like an index fund, a mutual fund, an ETF, and what amount of money you want to put into individual stocks or companies that you like. Obviously, when you're taking more risk, there's usually higher return and obviously higher chances of loss. And so that's why you have to weigh the cost and benefit of picking individual companies versus investing in an ETF or a mutual fund. We also talked about trends, how to spot trends, how to do the detective work, timing, talked about dollar cost averaging, which is, you know, putting your money into a specific investment over time and having a consistent strategy. Holding, how long do you hold for? Rebecca mentioned she likes to hold for at least a year, and there's obviously tax benefits to that if you're in the US. There's also, you know, I think your mindset is different if you're investing for the long term, and it can often be less intimidating than if you're investing, you know, like a day trader. That's very different type of investing. And then finally, we spoke about, you know, competition, value investing, and obviously the broader tax implications of investing more frequently versus less frequently. And those are a lot of different questions to ask, but just wanted to give you guys a sense of the types of questions you should be asking and how to kind of move from that A to B when you're starting to invest.
I think we had a comment in the chat asking, how have socially responsible index funds or ETFs performed over time? Does anyone have experience with that they'd like to share, or know how at all?
I mean, I can say right now that all of my green energy stocks are getting clobbered, bleeding, and kind of, Rebecca, to your point of, you know, Joe Biden's passing a huge green infrastructure bill, right? There are some times when the market doesn't make sense at any given moment, aka, new administration who says they're going to invest a bunch of money in green energy, and they all tank. One thing I have learned is that, and again, Rebecca, you kind of said trusting yourself here. if I have a theory about something and I feel like very strongly that I did my research and it makes sense, and sometimes things go down, just hold on and just close the app. Just don't look at it. I haven't looked in a few weeks. It's fine. But, for me, it's always been trust yourself and listen to the things that are around you.
So I've been hearing a lot of how do we invest in like these socially responsible like index funds, these companies, and still make a good return? I think this is really, really, really hard to manage, at least now. When you're actually just trying to get a return in the beginning, it's because like they may not perform as well as like companies that aren't so great for the environment. And for me, especially coming from like a first-gen low-income background, I care more about the returns right now. And over time, just like when you get older and you're probably like in the 90s stocks, like 10% bond, like breakout. As you get older and as you build like your wealth portfolio even better, you start making more room for like those type of investments, because I truly believe you reap what you sow. Like if you're buying from Amazon versus like your local bookstore, like you're I don't know if anyone here has seen like the statistics for it, but like a larger percentage, I think it was 30% of a dollar invested in a local store gets reinvested within that local community, versus these numbers are probably way off, and then I think it was like 2%, when you spend it on Amazon, it like 2% actually comes back to your own local community. You should definitely look what those numbers are, but the idea is that we should invest in what we want to see in our futures. However, there's like that struggle of like, but I want to make more money. So as like I'm getting older and my wealth portfolio is getting bigger, I like start putting in like maybe I allocate 5% more to like this area that is only giving me like a 5% return, versus like index funds that can get me like a 10 to 15% return. Like I'm okay with losing that sort of percentage breakdown in exchange for like cleaner air, a cleaner environment, or like more education for the world, et cetera, et cetera.
And I think one quick thing that I'll mention on the back of what Ashley and Rebecca said, which was about trends. And so kind of putting aside obviously as an investor, you want to put your money into things or values that you care about. But I think just from like a returns perspective too, as more and more people start caring about the environment and, are more socially responsible, you should theoretically see more money going into these types of companies. So I think just from an investment perspective, if you believe in that trend around like ESG and socially responsible investing, then putting your money into those types of funds or ETFs or companies may be positive in the long run from a trend perspective outside of the value argument. And I think that's something to keep in mind.
I do think there are a handful of gender-based funds and ETFs that I am under the impression, last I checked, were outperforming the market. And companies that do have greater diversity in their leadership, whether that's gender and race, do perform better as like their revenue than companies that do not have that kind of diversity. So I do know the gender ones tend to outperform the market.
And I mean, if you look at the data, I don't have the exact numbers, but there's been a record amount of inflows into anything that's, diversity, ESG focused, just across the board. And so there's a lot of money, like institutional money, that's going into these things now. So there's definitely kind of that broader trend also.
And one major signal to just take from all of this of like how there's like a new shift in the market is everything that happened with GameStop. So in the 1960s, 90% of like those investing in the stock market were retail investors and 10% were institutional. Now, about 30% of the market are retail investors. But what we noticed with GameStop is like everyone just like kind of like swarmed into this stock and just like blew it out of proportion. So kind of like what Rabia was saying earlier is like, as this trend grows where people care more about like climate change and like more like gender efficient companies, like we'll start seeing these companies start performing better over time because the retail investor is growing in their power thanks to shameless plug companies like public.com.
We can't take credit for the GameStop blitz, but yeah.
I mean, like making it easy
Totally.
to invest. Like, I mean that.
Yeah.
Just
totally.
take credit. Just take credit.
I don't know if we want to actually.
Listen, I took a ride on the. I took a ride on the GameStop Express, and I made money. I came out positive. However, I was so tweaked out for like 4 days, and I was like, I can't handle this. I just felt like every moment I was like, what's going on? Is this the moment? What, is there another tweet? Like, who did? I do not.
It was one thing that did reveal was like the power of being able to transparently have conversations about this stuff. And a lot of the counter argument to people who said, whoa, they can't do that was, this has been going on golf courses with people who have, many more shares. And it's really not that much different that it's out in the open with more people. And so that information is power and knowledge is power. And the more we can kind of get conversations like this out there, the more people will feel empowered to participate and get in on some of the upside that the market has seen.
Yeah. And I think the thing I learned from GameStop the most is that I don't want to invest in anything that I need to be like glued to my computer to deal with. Right. Like I felt like I was I mean, look, I only put in when I was willing to lose. And once I got to the point where I had made my investment back, like I sold that out. So I was just kind of playing with profits, but I was like so freaked out that like something was going to happen while I was like, I don't know, in the shower, and like I would lose all my, So for me, the thing I learned the most about that is like, I don't want anything where I have to be paying attention to waiting for an event when I am like supposed to sell. Right. And that was the thing that I took away from that the most.
You just want to subscribe. You just want to subscribe to your Pandora radio. That's it.
I just got stressed out hearing that story.
I was dead. I mean, yeah. I mean, for me, I do very much intellectually kind of enjoy the process of with my little funny money. I run a company, so I have to read about them for my job anyway. And like, what makes a good company? So for me, it's really fun for me to kind of see the signs of, oh, I like read this cool thing about this company, and like I think that's gonna be amazing. And you're talking about kind of mindsets here too. With my kind of fun money that I use, I almost like to think of myself as like a mini VC, where I'm like trying to find these companies early. So still working on this really long term, I'm not going to sell for X years scale, but I'm trying to find things that hopefully I can have a big upside on over time. But I think it's really fun to like read about companies and follow what they're doing. So for me, I like news that either reinforces my priors or kind of makes me want to invest in a company, but not news where I'm waiting to sell on something.
And I think that this is potentially a very good segue into looking at the stock submissions that people put through our form. We have a few, we got a lot of requests, and we've now selected 3 or 4 of the most popular ones. So I guess we'll start with Bumble, which was very popular, I think, given as well the recent IPO. How would you guys evaluate investing in Bumble?
And I think in the interest of time, because we got so many submissions and we picked only a few, maybe we do like a quick lightning round type situation. So everyone quickly mentions their high level thoughts, questions they'd ask, so we can maybe get through 4 or 5, and then a couple of the live audience questions as well before we wrap up. We have about 12 minutes.
Awesome. So who wants to take it away? Rebecca, I think you
I'll just quickly go at it. So when I think of Bumble, I think of Tinder. I think about, what other products have existed, what other services have existed before. And so I think of like the whole MySpace, Friendster, Facebook situation. I always think like the first starter that isn't always the one who like achieves the entire market share. So when I think of Bumble, I think of like, obviously like it's some of the similar previous leadership from Tinder, and except like she had changed like some of the mechanics. So that to me was like really important because she already had the history of working at Tinder, and she knew how to adjust that company so that it would perform better. And because I simply travel a lot and I hear people meeting each other on Bumble in random places of the world, I'm like, wow, okay, this is definitely market penetration. That's my update.
I own Bumble shares. I think Whitney's an incredibly talented CEO, and I'm like, we love Bumble at Ladies Get Paid. My potentially bearish case for Bumble is I used to work at IAC, which owns Match Group, or they spun out Match Group, which is the collection of Match.com, OkCupid, Tinder, like Hinge. They own pretty much every other dating app other than Bumble. And Joey Levin, the CEO of IAC, is the only way I can put that is like unbelievably savage. So for me, I personally would not want to compete with a big institution like IAC in that way. I do also own Bumble shares, and I'm very supportive of what they're doing. That is my only personal drawback there, is this point of competition and, you know, what are the other properties under Bumble that they're going to roll out?
For me, love Whitney Wolfhard as the youngest female CEO to take a company public. I don't know enough about their revenue model or their differentiators, or like what, when you hear the word moat, like what is keeping competitors, like what Ashley mentioned, out. I feel like I was excited about the IPO and I kind of had FOMO on that day, but myself, I didn't understand the business enough. And so I'm kind of on the sideline watching and learning more, having conversations about it. And that's okay to do. You can be excited about an IPO, but say, you know, I don't know enough yet. I'm just going to follow it. So that's where I'm at.
Can I make a very small interjection about buying because of FOMO? Do not do it. If you are like seeing something rocketing up and you're like, man, I should have done that, do not do that. I've done that a handful of times and ended up like buying at the peak. And we're just holding now and it's fine. But like, if you are seeing something pop off, you're too late, and just like chill for a second. It'll probably come back down and you can buy it then.
Or it might not be too late. You might just be doing it for the wrong reasons, going back to just knowing your own risk tolerance, knowing kind of what you know, and looking at yourself and being like, you know, do I want to actually do this, or is everyone else doing it? I'm feeling left out.
Yeah, exactly. And I think for those of you that are interested in understanding more like about the behavioral biases around investing, we have an entire session on this on our YouTube channel that you can check out, which talks about FOMO and other things that investors fall prey to. So you can check that out.
Good one. Case study on Ashley.
We're just holding. It's fine. It doesn't feel good all the time. Don't worry, Dad.
What's next?
Okay, let's pop to the next one. So one of them was also Amazon, which is, I guess, a big one as well for a lot of people.
I can start there. So I guess something that Amazon is like a very safe stock that you can invest in over time. It's always going to go up. Something I think about is I think about shares a lot also, right? Like, it's amazing that you can buy slices of stocks, right? So you can own Amazon without buying it at $3,000 a share. However, you're not really like owning a lot of shares there. So if it's going up X over time, right, is your proportional increase in that going to increase as much too? So sometimes I shy away from stocks that have like unbelievably high share values. Look, Amazon is a giant company that is never going away. And Amazon also, you know, most people understand it through using their Prime subscription. They use it on their TV then. They have Alexa, which then they have all of our personal data for all the dumb conversations we're having in our living rooms. They own AWS, which a lot of people probably don't know powers the entire internet. They also own Twitch, which is one of the largest video streaming platforms on the internet, right? They are like 500 different companies in one. It is always going to be a safe bet. Some things I do think about, which wouldn't really, I don't think, cause the share price to like take any kind of hit, would be are they going to come into any trouble with like antitrust laws now? Are they going to get prosecuted? Elizabeth Warren has been like all over them, and Bernie Sanders. So there is some kind of risk there of the government coming in because of anti-monopoly laws. There is also some theory that they may spin out AWS into an entirely other business. Again, part of this avoiding antitrust laws. But like as of right now, they're like a giant company, biggest on the earth. You can literally get everything you want, and like everything you do is probably touched by Amazon in some way.
So when I think about Amazon, I think about the ecosystem that they have created. A lot of people make money off of drop shipping. Like a lot of suppliers get their stuff from China. So I think about how all of this is connected. To me, ecosystems are very strong because that's kind of like a moat, like Katie was saying. Just like Apple created like the MacBook Pro, the iPhone, the iPad, the iPad Mini. I don't know. I'm gonna run out of things to say, but it's the same thing. As long as companies are able to build like very, very strong ecosystems. Same thing with NFTs and crypto. I'm thinking about the same thing. Like you have thousands of people like propping this up. So just like Ashley, I really am long for Amazon. However, will they always exist as Amazon exists today? AWS is huge. Like every major startup is probably using AWS, and there's a lot of vested interest in keeping that going. But just like Ashley was mentioning, you know, what's going to happen to big tech? I definitely think some things are coming down the pipeline to see how we break this stuff up, because they truly are monopolies. Like I don't care how you want to argue this, they are definitely monopolies. So that's how I'm thinking about Amazon. Even if they get broken up, I'm still long that they will still be worth more than they are worth today.
Yeah, just one thing to add there is that if you have a 401k or a mutual fund, you probably are in Amazon. You might not know it. So that's probably built in there. So yeah, it was actually an interesting conversation going on public over the weekend about the Alabama workers trying to unionize, and it was really interesting because there are people in the app saying, "I work at Amazon," or "I have union experience," and you kind of got that layer from somebody who's lived it. And there was a really good debate around, you know, is Amazon good or bad? And it's always a tough question because a company is so many things. On one hand, Amazon has created a lot of jobs. They have a $15 minimum wage. On the other hand, there's pushback on how they treat their workers. Are they too big? And it's like a personal decision how you want to play that. But interesting to have these conversations. And I think the AWS point that they both brought up is great because that's not something that's commonly out there, but is really, really core to their business and just interesting to learn about.
Awesome. I mean, do we have time for another one, or should we?
One more.
Okay, wicked. One of the ones that we had as well was Airbnb. Do you guys have any thoughts on that one?
I love anything. I mean, I've been thinking a lot about like pandemic pent up demand, right? And so for me, anything that you think people are going to really want to do now that they have not been able to do for the past however many months we're doing this for now is good for me, right? So like Airbnb, hotels. I own Jets, which is an airline ETF. Again, I didn't want to pick one, but I'm like, yeah, all the airlines, they'll probably have a little boost right now. And for me, you know, whenever I travel for work now, I always use Airbnb. Like I don't stay in hotels anymore. So I think also they'll probably expand into business travel a lot more. For me, I used to be on the road a ton. It's nice to like have a kitchen, right? And things that you don't really get in a hotel. So for me, I think it will capture both. If business travel is going to come back, which I think maybe it's not going to come back as much as it was because we all live on a computer now, but anything where people are traveling and increasing either recreational or business travel, for me, I like.
So when I think about Airbnb, I think about supply. As you guys know, a lot of big cities have been trying to crack down on like people being able to like lease their homes for like short-term rentals. So I think, okay, so supply might go down, demand may go high, blah, 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 blah. So as Airbnb, I'm thinking, okay, how do I make these communities like me better? And what I'm really bullish for Airbnb is how they started setting up Airbnb experiences. So they want to be able to create more localization. I genuinely believe COVID has introduced more localization. I mean, I saw like Etsy spike up. I saw Shopify spike up. So that to me signals that localization is going to become even more important, because instead of like consolidating our dollar into the pocket of a billionaire, we want to be able to spread that $1 into like many different places. And companies that adopt this strategy, like Airbnb, trying to do more experiences, maybe giving more of a cut to like local like companies. Like, I don't know if you've ever done like photo shoots in LA or like photo shoots in Denver. That to me makes me feel more positive about Airbnb's future outlook.
And that kind of also makes them a travel company, which adds to their revenue.
Mm-hmm. And their name's now a verb. So anytime that happens, it's not bad. But I did read recently Marriott's kind of trying to build some sort of home rental thing. So it's interesting. You're only ahead until you're not, and the disruptors are being disrupted by the people they initially disrupted.
Yeah.
Airbnb has more rooms than every hotel combined, though.
Wild.
So like,
what a fun fact.
Do they have the moat? You know what I mean? Like, we're like, oh, it's Marriott. They're older and established, but Airbnb has more rooms and more supply than every other hotel chain combined.
Crazy.
That's insane. I did not know that. Very interesting.
Very nice.
I do want to quickly address one question. Someone asked if you guys look at things like beta, year-to-date return numbers, like more of the technical indicators for stocks or companies. So just quickly, your 2 cents on that.
I don't do any beta, theta, eta stuff. I just kind of look at past performance, and I encourage people to zoom out when you look at that, either if you're having a bad day or just what you're looking at in general. Look at like a 3 and 6 and 1 year term. If you do think something is tanking for a dumb reason and you want to buy it while it's down, like that's good. But that's where my comfort zone is when we're getting into like theta squeezes, is when I'm like, I don't have enough time for this and it makes me anxious. And so like personally, no.
Usually when there are like huge market shifts, like for example, one of them I would identify as like the 2008 recession or the 1990s like .com crisis. Whenever there's like a major shift in the market, I try to focus on what that year-to-date returns are. So I focus on like, but I focus by like looking at specific ETFs and seeing which were the most top performing ETFs, who got the highest like year-to-date returns. Aside from that, I also look at the expense ratios. And I know there's like this point in the community, in the personal finance community, where everyone says, don't get an expense ratio that's higher than like 0.5. But if my returns are like ridiculously high, and if my expense ratio is 0.5, like you bet I'm going to take that ETF. So I do look at it when it comes to when there are like huge market shifts in the market.
Awesome. I think potentially we should be wrapping up. Yeah, we're getting over time here. But I really appreciate, first of all, the audience, all of your questions, and thank you for turning up live to watch all of us. And we'd like to say a huge thank you to our speakers, of course, Rebecca and Ashley, and Katie for helping us organize this. Couldn't have done it without Public as well.
And thank you for you two being excellent moderators.
Yeah.
Cheers.
Thanks, guys. Appreciate it.
No worries. Our pleasure. I would like to say as well, first of all, go and buy Ashley's book. I think that would be great. Second of all, follow these gals on their various platforms. You can find Rebecca at First Millie on Instagram, LinkedIn, Twitter, the lot. And same with Ashley Louise with Ladies Get Paid. And then Public at Public Hello. And make sure to check your emails because we're going to be sending around a kind of wrap up of the discussion points, as well as a survey for everyone to fill out. So you can give us some feedback on how this all went.
And one quick thing I'll mention, we included a link in the comments below for your $1.20 slice of public stock or stock on public. And so you can claim that as well. The link is there. We didn't mention it at the start, but if you're still here, you can claim those that free stock slice.
Great. Thank you, guys.
Thank you.
Awesome. Thank you, everyone. Have a lovely
Bye.
Bye.